let's check the let's see the US 500. So you see, on the US 500, we had price trade within the last 2 weeks. You see, this last 2 weeks when we were away from the market, so we took a break. On the week of from the 13th of May to the end of May, going into June. So you see, there was choppy price action inside of here because we have reached a form of buy side liquidity. We have taken a form of buy side liquidity. So when price takes a form of buy side liquidity, you you expect consolidation. During this consolidation, the market makers will build sentiment on the background, will build in retail sentiment to make them confused on where price is going next. Because currently this is the all-time high. We are currently at an all-time high on the ES, that is the US 500. So there is no possible way to say this is the draw on liquidity. This is where price is going upward. So you should not pick. This is why you do not pick tops in a bull market. You do not pick tops. So let's go to the daily to get this clearer. So as you can see, so as you can see, when we had this rally higher, the buyers from here will take out their buy position, their buy orders. They'll take it out above here. They'll offload their buy order positions above here. Why the market will enter into a consolidating phase. And during this consolidating phase, you do not want to be participating in the market because it will be just a choppy price action all through. So we had price make this high here, which is from my side, this is buy side liquidity. So here we had buy side liquidity. So buy side liquidity was above here. So price started purging sell side. So immediately we had this purge in sell side liquidity. Immediately we add this purge of sell side here. We wait and expect a rally, an expansion. Sorry, wait for an expansion leg higher, which is below this level, which is a discount. So if you take your fib from this swing point to this high, from this swing low to this high. So why are we using this swing low and not the swing low? Because we do not expect this body of price action to be filled again. We do not expect this body of price action, but going forward, I will explain why it is. So because on the daily we are bullish on the ES, we do not expect this to be filled. This is a breakaway gap. Any price that violates this low, if we had price violate this low, it will be seen like price will now be interested in this inefficiency here and possibly these lows. So that's what we are currently waiting for the ES. We're currently waiting for price to signify lower prices because we are waiting for a purge of sell side liquidity on the dollar. And if you are anticipating a purge on the higher time frame level on the purge of sell side liquidity on the higher time frame for the dollar, that means you're anticipating a purge of buy side liquidity on the ES. So that is intermarket analysis because you are using markets that are inversely correlated because the ES and the dollar are inversely correlated assets. So if you're expecting purge of sell side for the dollar, you're expecting purge of buy side for the ES. Hence, why price trades higher to this buy side liquidity level on Wednesday's trading, Thursday's trading, and also today's trading, being Friday's trading. So, hope that's clear. So, if you take your fib from this low to this high, because this is the swing point, this is the swing low that made this rally higher. So this was the swing low that traded inside of this fair value gap, this imbalance. So it traded down into it and price valued higher. So if you take your fib from this low to this high, below it, below this range, the equilibrium is here, which is 5256.5. So every price below this 5256.5 is a discounted price market. We'll, going forward into the mentorship, we'll talk about discount and premium, but I'm just doing a general review and a general overview of price action within the last 2 to 3 weeks and going forward. So we traded down to below this lows here, which is a purge of sell side liquidity. So when we had a purge of sell side liquidity on the daily time frame, price valued higher. And during this time on the dollar, if you check the dollar, we had a purge on buy side liquidity. You have to look that by yourself. So for you to understand what we are doing here, you have to put in chart time. You have to look at the chart by yourself, because you're not, like I said earlier, you're not here to follow signal. This is not a signal service. I do not provide signal services. You are here to learn how to read price independently on your own. So till you get to that level, you work on yourself to get to that level. So every price below this equilibrium, below this red line, is a discount. So we had price purge this low here. So when we add that here, price valued higher on Friday, on May 31st. So if you are to participate in this type of market, if you want to participate within the last 2 to 3 weeks, like you must trade, you should not trade below the 4 hour time frame, minimum the 1 hour time frame, and you go down into the 1 hour time frame simply because you're looking for entries, for your entries, because your entries will form if you are swing trading on the 4 hour or the 1 hour time frame. Anything below the 1 hour time frame, it will be chaotic. It will be full chaotic, because we already purged buy side liquidity on the ES, and we noted that after price purged the buy side liquidity, price will enter into a form of consolidation, which it did here. So after this consolidation was made and the low of the consolidation was taken out and the high is left untapped, that high now will be your buy side liquidity, because from the dollar, as we illustrated earlier, we're expecting lower dollar to purge out that sell side liquidity before. So because we need to see a change in narrative from the general public on the dollar. We are watching the dollar like a hawk, like a hawk watches its prey. You watch your prey. You want to see the weak. So if let's say the lion is hunting an herd of gazelle or deers or stuff, something like that. when that lion watches its prey, it watches to see the weakest link. It watches to see how those dares, how they behave, which of them is the weakest. So when it's going to target, when it's going to hunt, it goes directly for that particular weakest link. That weakest, the slowest of the head, the weakest of that group. That is where it focuses on. It does not, when the lion goes to hunt in a when there's multiple animals, there is multiple prey, it doesn't focus on all of those prey, because that those all of those prey, yes, they are food, but they are also distractions. So you have to watch out for distractions, not to pay attention to them, to know that you have to ignore those distractions. So that is what we are currently doing. We are like that lion, watching those heads of animal, watching to see the weakness of them. We are watching to see where they are, where they have lost guard, where they have lost their guard, and who is the weakest of that link. So that is that the weakest of the link. That is where you follow, you go and you hunt and you cannibalize on that weak link. So that's the same way. That is how this algorithm works, and that is how you should think. That is how you should operate as a trader, as a human, generally. But that's by the way. So as you see, so when we so if you go down to the 4 hour time frame, if you go down to the 4 hour time frame, after this expansion leg higher, I gave an assignment on the group to check out these lows, if this is a purge of sell side liquidity or if it's a sweep of sell side liquidity. The assignment, if you did participate in the assignment, then you would benefit something from it. But if you didn't participate from the assignment, it's all good. So it's better for you for you to go into the chat and you check everything we are talking about by yourself, because you do not want to just take something randomly and believe it. That doesn't make you an independent thinker. That makes you a dependent person, and you do not want that. You don't want to be over dependent on me or anybody else. So from this last up close candles here, this was the last up close candle before the low was taken out, before this low here was purged, and this sell side liquidity was purged. So because that low was purged here, when we had this rally higher, when we had this expansion leg higher, we are looking at this last down close candle, which is a bullish order block, and this last up close candle, which is a breaker block, which is a bullish breaker block. But that's by the way. This is also a price review, so just go with me. So when you have a week like this, when you have a long week, you pay attention to the when you have a candle with a long week like this, you pay attention to the week, to the high of the week, the midpoint of the week, which is the consequent encroachment, and the low of the week, which is this. So you see price traded back down into it here, so indicating that this is a reversal leg, because it left these smooth highs here, and this high here was resting here, and we had buy side liquidity resting here, which corresponds with our target for the dollar being bearish. So because we are bearish on the dollar, we'll be bullish on the ES, even though it will be a choppy body of price action. But I'm just referencing this. Say you want to participate in the move higher, which I didn't participate in this move higher. So you act like you when you go to review your charts, when like this, you tell yourself that you participated in this move going higher. So we had this week down into this bullish order block, and the consequent encroachment of this week of this breaker block, this bullish breaker block. So we had that here. So the candles was telling the story. So we add that here. So trade back higher and reach buy side liquidity. So hope you got something from it. I'm still rusty on price action, so I need to back test for the next for the weekend. So I want you guys to go into your chart and you study the market efficiency paradigm, like we talked about with for the first two videos in this playlist. So you have to study the market efficiency paradigm, like I told you to look as I told you to do, because once you have that basic understanding of that market efficiency paradigm, everything we are going to discuss going forward will be as easy as ABC, and that is what you want because this market is simple. It's very simple yet complex. So, wish you a great weekend. Have a great study or a great rest, whichever state of mind you are in. So, see you guys next time. Goodbye.